I think we're on all the socials, all the fun places where all the fun people hang out. All right, let's get started. Hello, Smart Money Tree podcast listeners. Welcome to this week's show. My name is Kirk Chisholm. I'll be your host, and today I'm joined with my good friend Phil Weiss. Hey, Phil.
Hey, Kirk, how are you today?
Doing great. Happy Friday.
Absolutely.
It's rained all week, but it's beautiful today, so I'm happy. It's great. Let's go back from a bike ride. Got to be outside again. You know, it was great. It was wonderful.
Oh,
It's
very
like last
nice.
weekend.
My daughter graduated high school yesterday, and we had nice weather, fortunately, for that, so it was good.
Ah, congratulations. Now the big bucks start having to go out the door for college.
I know.
The little money is done. Now we're into the big bucks.
That's correct.
The college take their pound of flesh for teaching you whatever. I'm not going to get into that. I'll wait for Doug to get into that rant. Well, in other news, at least we didn't get brought up in felony charges today, Phil.
That's right.
We're not pulling any punches today. I have to say, and I don't talk politics, but for those of you who are political, I'll just make this point. If the Democrats wanted Trump to win, the best thing they could have done was convicted him on felony charges. I can't count how many people who said, I wasn't going to vote until this happened. Regardless of who it was, even if they did this to Biden or someone else, I will tell you that I feel like we're going into Banana Republic territory. Anytime that one political party convicts another political party who's running for office for a crime, and the political party that's in power did it, that's like South American politics. That's Banana Republic kind of politics, where if you don't like your opponent, you just convict them of a crime. I thought we were beyond this in this country, but apparently not. So if you're celebrating this, you're probably one of the people who's like, "Oh no, it'll never happen here." They'll never come after those. There'll never be another Holocaust. There'll never be another whatever. Like all the things that happened in the past. If you think, "Oh no, that'll never happen," okay, don't worry, you'll be first. I mean, I won't keep going in this rant because I'm not that I didn't think this would happen, but I truly thought that we were better than this as a country. Beat them at the polls. If you can't beat them at the polls, then hey, throw them in jail. Whatever. Really, I'm speechless. But anyway, congratulations for Donald Trump for winning the presidential election in November. Because this is what did it. If you had to point to a point, this is it.
To that point, he did get, like I read, the amount of donations that he got after that happened was ridiculously high. So it goes right with what you're saying.
Yeah, it has nothing to do with politics. This is just like, things that should and shouldn't be done. But while we're we're talking about politicians, I will throw out a piece of news that actually it pivots away from people canceling their subscription to this podcast and into something else. But really, if you look at some news came out, so we've been talking about this for a few weeks, and I mentioned this a few weeks ago, how I noticed that all of the negative talk around nuclear stopped. All the positive talk around wind and solar and all the other garbage technologies that are insufficient to meet our needs, all of that stopped. And I was like, this is interesting. Why has all the push? And for those of you who are just joining in for the first time, we're big on assessing the persuasion bubble. And if you don't know what that is, it's basically media having a uniformed talking point where everybody has the same talking point, no matter what news, no matter what media, wherever you get your news from, they all have the same talking points, which is interesting if you think about it, because that's not how reality works. If things weren't connected, everyone would be talking about all these different things, but they don't. They talk about the same thing because they all have the same talking points. Right, left, doesn't matter. It's weird if you really actually study it like I do. Anyway, so I study that zeitgeist, if you will, of what's going on and what's being talked about, because it's informative of how they want you to think. And once again, I'm going to get my tinfoil hat on because I'm talking about they. I use the word they, so let's put my tinfoil hat on so I can talk about they. They want you to talk about, Okay. And so when you look at the media, when you watch a news show, and I haven't watched a news show in 20 years, so I assume they're still doing this. They bring on somebody for a point and somebody against a point because that's what gets people whipped up. Well, that shows that there's 2 points of view, but there aren't 2 points of view. There are millions of points of view. They only give you two because they're feeding you what to think, right? And that's how media works. So if you don't think that's how it works, it's how it works. Trust me. If you don't believe me, look it up. It's how it works. So they're giving you your points of view and your perspective. So if you think you have your own perspective and you watch the news, you don't have your own perspective. You have their perspective. So the way to think about it is to stand back from that and try to think, all right, what's going on here, and not get whipped up into a frenzy, but try to disconnect yourself from the emotion that they're trying to derive from you. Because if they get you emotional, you'll keep watching. It doesn't have to be a big conspiracy. And I have this on because people immediately think it's a cabal, a conspiracy. It doesn't have to be. It could be just, this is how your brain works. If they whip up your fear emotion, then you're going to freak out and you're like, I got to watch TV. I got to know what's happening next. Nothing's happening next. But the fact is, you're watching them, you're freaking out, and you need to follow them. That's what they want. They want the eyeballs. So that's why I don't watch the media, because there's nothing positive that comes out of it. Now, getting back to my point. So a few weeks ago, I said, I've noticed all the green stuff has stopped. Like, I wasn't hearing anything. It was weird. No ESG garbage. None of the, electric cars were starting to get, let's say the sentiment was changing. I'm not really sure how to describe it, but the sentiment was changing. I noticed it changing. It wasn't directional. Solar, wind power, all that stuff, it all stopped. It's like, where did it all go? I mean, there's still people talking about it, but it wasn't being talked about in the mainstream kind of conversation. Then I saw this come out a day or two ago, and I'm going to read it to you. It was a news clip from somewhere else, but it's a short paragraph. What it said was, the White House is throwing its support behind building large-scale nuclear reactors, announcing new measures intended to accelerate their development. The last commercial-scale nuclear reactor built in the U.S. Southern companies, or SO is the company. I can't even describe this project, was more than $16 billion over budget and 7 years behind schedule. The Biden administration said nuclear energy is needed to meet climate and clean power goals, but a dozen reactors have closed since 2013, losing out against cheaper power of natural gas and renewable energy sources. Was what I did a guess, or was I actually paying attention to what was going on? And you wonder how, if you want to actually figure out what's going on, all you have to do is just follow the zeitgeist and figure out what people are saying and what they're not saying. The reason I thought that was interesting is we've been talking about nuclear, and nuclear has, the negative talk has stopped a month or maybe 2 months ago. And I started to notice some people positively talking about it when they never talked about it at all. So it's almost like everybody got in a room and like Dr. Evil got in a room and they're like, all right, we're going to bring out nuclear. Like, whatever it is, like it's the sentiment that's out there, and that is where the push is starting. I laugh because Biden has come out with some interesting stuff in like the last few weeks because he wants to get elected. Like, why didn't you talk about this 4 years ago, Joe? Like, where was that? Why are you starting now? Like, this would have been useful 4 years ago when we started talking about this. Or the support behind not having CBDCs. Great. The House passed a bill that said no CBDCs. Awesome. The Senate still has to pass that. But I don't like talking politics, but these are interesting developments. And I'm not taking a political stance. I'm just saying this is an interesting development. So the fact that the White House has supported cannabis in the last 6 months, they're supporting nuclear, all positive things in my opinion, right? And I always slam the president and the party in power because they're in power, and what else are you going to do? But the reality is those are positive developments. Even though Joe may be sleeping or have dementia, the fact is whoever's in charge pulling his strings are supporting cannabis and nuclear, which are actually, in my opinion, positive developments of our country in the right direction. People are already smoking dope, so you might as well make it legal. So when it comes to nuclear, though, there's a lot of positive developments that are going to come from this. And I mentioned this in the past, that if you look at history, and if you look at where the biggest evolutions in history have come from, and the best jumps in technology and progress have come from abundant, cheap energy. The more abundant, cheap energy you have, the more technological developments that'll happen. If you want electric cars, you can't run it on what we have now. We talked about in the show like about a year ago. There was like news clips 2 days in a row. Like first day was like, um, it was like have more. You know, we're going to mandate new clean energy like EV cars. Everyone has to have an EV car. This is California in 5 years. The next day, a news story clip came out, said everyone stop charging your EV cars because we don't have enough energy to power the grid. I mean, like I mean, that's California for you. But the point being is, like, we cannot evolve where we are because we don't have enough cheap, abundant energy. And the only way to do that is through nuclear. Now, I've also started to see, mind you, this is the other side of the coin, but at the same time, I started to see the change in sentiment. I've also started to see a change in positive sentiment towards, I'll call it dirty energy, right? Like, carbon-based energy. And so I've also started to see a pushback against in the direction of we're going to do more of this. I think what happened is people just actually woke up and did the math and realized, hey, we can't run the world on this clean energy garbage because the numbers don't make sense. There's nothing against clean energy. I'm not saying I'm against it. I'm just saying the tech we have doesn't work. It doesn't supply what we need to run where we need to run. So I think people have started to realize that, and they're like, all right, we're getting ourselves into hot water. We need to adapt. We need to change course. So I love the fact that we're going into nuclear because nuclear is clean. It's carbon free. It's people are afraid of it still because of the Cold War, but it is the best way for us to move forward to meeting everybody's goals. Clean environment, no pollution, all that stuff, everything everybody wants. It is the only way we can do it given our current technology. The biggest challenge with nuclear is red tape. So good old Joe can support large scale nuclear reactors, but the problem isn't nuclear. The problem is red tape. If it takes you extra $16 billion to complete a project and 7 years behind schedule, I don't know what I don't know what the real schedule was, but what's that, 15 years to complete a nuclear project? So all the problems we have aren't going to be solved for 10 to 20 years. That in itself is a problem. Now, I know there's tech out there that's going to speed it up. So we'll get into that in another show. But my point is we've been talking about this for a while. This is a positive development for our economy, for the global economy, everywhere. It is a really positive development. Are there some negatives? I'm sure there are. We'll talk about that too. But I think it's a very good development. And as much as I like to rip on good old Joe, kudos to you and your team or whoever's pulling your strings today. Kudos to this development. I'm sure nothing will happen before the election, but at least you're talking in the right direction. So good on you, Joe. All right, what's next, Phil? I've done way too much talking.
I mean, I'll just add towards saying I think it goes a little bit beyond the red tape too, because there's also the NIMBY syndrome, right?
Yep.
Nuclear sounds great. All these different things sound great, but nobody wants it in their backyard. And the other thing that makes so many of these alternative energies hard is infrastructure. Our grid is bad. Like I could put wind farms out in Wyoming, but there's not enough people where they are, and we don't have a grid that lets it move. And that's why some of these things also are very difficult to implement because we just don't have a grid that allows it to happen.
Let me make one point and I'll let you continue. Sorry. Somebody mentioned this to me yesterday that they were walking through a pier. I forget where they were, but they were walking by or driving by an area that had high winds and they have windmills, and they were at peak period where the winds were the strongest, and the windmills were off. And they were off because they were trying to manage the cost or the price that they were getting. It had nothing to do with generated energy. It had to do with the political meandering of the system and bullshit that goes on. It's garbage. This is why I hate the clean energy movement, because it's not about providing clean energy. It's about politics and all this other crap. Like they should be on all the time, but it's not. Anyway, go ahead, Phil.
All right.
Got that
So I am going to take us to something different, um, and not recommending or for or against the stock, but Nvidia, they came out with earnings and the stock went up again. But if you look at it, it's crazy about how big this company has become in the last year plus. I mean, its market cap is approaching $3 billion. And I was reading an article this week, and think about what that is. I could take McDonald's, Pepsi, Salesforce, Coca-Cola, AMD, Bank of America, J&J, Costco, and Procter and Gamble. Add the market cap of all those companies up together, it's less than Nvidia. If we want to get into other members of uh, the set the seven,
Magnificent
the
Seven.
magnificent seven. Well, I can include Meta with Berkshire Hathaway and JP Morgan. I don't get up to Nvidia's value. I could add Amazon with Walmart and Netflix, and I'm still short. I can take Google, Home Depot, and Disney, and I'm still short. So think about that. Nvidia, it's that big, and it just seems crazy to me. And I think back to the tech bubble that we had, and like I said, I'm not saying to not buy, to sell anything about Nvidia. I'm just commenting on what's going on. We go back to the tech bubble and Cisco. There's so many similarities between what happened with Cisco, and then it just grew out. It grew crazy because we got excited about what they had. For Cisco, it was routers. For Nvidia, it's AI chips. Is this company really worth that much? I mean, is it worth so much more than all those other companies? I mean, there's a lot of good companies that have been around a long time. It just doesn't make sense to me that the value has gotten that great. Maybe it means that Nvidia's priced right and those other companies are all undervalued. I can't say. But just when I do those kind of comparisons, they just don't make any sense to me. They seem way out of whack. And I worry about the other side. We get too excited about these things. And then what happens on the other side? JP Morgan, I don't remember the details, but years ago, I remember them saying about all the stocks here, they hit a number, whatever that may be. And then they never get back to it again, ever. I mean, Cisco's never been back to where it was. Microsoft's the rare exception, right? You looked at Microsoft and it got to a really high valuation and then it fell and the stock meandered for a while. But then it has now become worth much more. But that's the exception. So many of these companies, I mean, you have Intel up on the screen. That's another one, right? That stock hit values in the 2000 time frame when we were worried about Y2K, and it's never been back there. Mm-hmm. So you just have to be careful when you think about it. Understand what kind of growth is priced in. Understand what the market is, because these things don't, oftentimes we get too excited about things and the end result can be a lot of pain.
Yeah, and I want to reiterate, we're not giving you investment advice on these stocks, but these are instructive for just to talk about principles. The reason I put up Intel is because they're in the same industry, right? And Intel's semiconductors too, and it went up to in the 75, almost 76 range in early 2000, and now it's at 30. So it was and I remember this because back then there were a lot of companies that were way overvalued. And I say overvalued in air quotes because, what's overvalued nowadays? Everything is, but if you look at Intel back then, I remember it was really overpriced. And because, hey, the world's going to keep expanding and everyone needs chips, right? Why wouldn't it keep expanding? Well, turns out that they don't grow at the same pace forever. And, it's just not how things work. Trees don't grow into the sky. At some point, things come back to earth. And NVIDIA has a very similar chart to Intel at this stage. And it doesn't mean it can't go higher. And it doesn't mean it's going to crash. But what it does mean is that based on the current numbers, you shouldn't expect the stock to keep going into this pace forever. And I think that's the lesson. Like, just because it's gone up a lot doesn't mean it's going to continue going up at this pace. It could go up from where it was like $1,090 approximately at this second. It could go up to 5,000. I don't know. But ultimately, at some point, people become rational again. And at that point, that's when prices come back. As Phil, you said, a bunch of stocks. Microsoft's a good example. Microsoft was a high flyer, and then they got pummeled. It was down, I don't know, 60, 70%. And it was sat down there for years. And that partially had to do with Ballmer because he was such a bad CEO.
Yes, he was.
Um, but Nardella's done a great job, and he's pulled that stock out of the rut, and it's been doing well. But if you look at these stocks like tech, especially tech is a boom and bust thing. Um, I'm curious, has Nvidia exceeded Apple at this point? I think it's still like 5% shy, right?
It's a little bit less, but
Yeah.
it's pretty close. I'm going to look I'm going to take a look, but I know that Nvidia is short of 3 trillion. I thought that Apple was above it, but Apple stock pulled back a little bit. So let's just see. So I'm looking here, and I see, as of right now, I see Nvidia's got 2.68 trillion, and Apple shows at 2.92. So Apple's
Yeah.
still a little bit bigger.
Yeah, so it's basically we're within a few percentage points of the difference, and I'm sure there'll be balloons falling from the ceiling as soon as Nvidia eclipses Apple's price, and Apple's basically been going sideways for like the last year or so, and based on the news coming out, it's not. There's, they just said, oh, by the way, we're giving up on our Titan project, and this isn't working, and now they're going to go into AI. Like, okay, well, that's fine, but it may take you a few years. So it hasn't kind of continued to grow stock price wise. But if you look at these other things, like that's really expensive. Like Nvidia, like is Nvidia going to take over the world? Is that the only company? I think a large part, if I'm speculating here, a large part of the growth of Nvidia has to do with the fact there are so very few AI stocks to invest in. Also, the fact that it's gone up so much means that more people are buying because it's going up. Imagine if we didn't have cryptocurrency to invest in, Phil. This stock would be like 10 times higher. But because it's not doing as well as crypto, we still have people investing, in air quotes, in crypto.
Yeah,
It's crazy, but that's the world we live in, right?
it sure is. It's so crazy.
So to Phil's point, I think just be careful. We've had a good run up this year in stocks. Today's the last day of May, and June starts, and the markets are feeling a little heavy to me. So I don't say this often because it's weird, but you've been around long enough, you kind of have a sense of how things feel. Like, all right, this is feeling a little bit extended. The sell off's a little bad. Like, it feels like it's a little too extended. So it's not really a mathematical equation. It's just more of like you kind of watch things enough and you get a feel for sentiment. And this is one of those things. Right now, things feel a little heavy. But there's been a weird underpinning of the markets for the last 9 months. We're pretty much, things have gone up. There hasn't really been a logical reason for it, but everything's going up. But most of the market gains have been in a handful. I think like 30% of the stocks are positive. Most of the stocks have actually not been doing great this year. I looked at a few yesterday, and I was surprised at some of the big names just haven't done as well as you would have thought. But when you have a handful of stocks leading the way, that they push the index up, when you have 30% of the index leading the charge higher. I mean, what's Nvidia up this year? Like 100% or something crazy?
I think it might even be more than that.
It's probably more than that. Yeah, it started at 480, somewhere in that range, and now it's at 1090. So yeah, we're looking at over 100%. Let's call it 110, 100. Yeah, it's 120%. So, that's and that is arguably tied with Apple for the largest company. So there's a large percentage of the index that are in both of those stocks, and Apple's gone sideways, so that hasn't really moved the needle. But Nvidia going up 100%, let's say it's 10% of the index, that's 10% right there. The index could go sideways, and if Nvidia goes up 100% and they're 10% of the index, that's 10% growth on the whole index. That's scary, right? So what's the rest of the market doing? And so I think it's just it should be, people should be mindful of the fact that we're getting into kind of peakish territory, and I'm not saying it can't go higher. I'm just, because it can always go higher. I'm just saying it. There's a certain point here where people are going to wake up and say, "All right, this is a little too much for me. I like the growth, but let's take some profits off the table and sit in the sidelines." We have an election coming up in a few months too, and that's gonna it actually doesn't do much for the markets as much as people think. And certainly whoever gets elected is not going to matter because we've seen them both. So we know what we're going to get for both candidates. So that's probably not going to impact much. But we are going to, uh, we shouldn't expect that the market's going to keep going at this rate. I think that's probably, if I had to guess, maybe another 5% of the index at most. I could definitely see some more downside from here, but if it goes up 20%, then we live in fantasy land, and I'm gonna watch out for rabbit holes that I can't fall down. So, what else is on your plate today, Phil?
So I just want to add one slight change. Microsoft is actually bigger than Apple at this point. Slightly.
Oh, it is.
It's just over 3 trillion. Yes.
Okay. Interesting. Okay.
Yeah.
Good to know. That's so it's Nvidia's got a little bit further to go.
Yeah.
Well, Microsoft actually has been growing at a good clip, and I was listening to a podcast the other day on Acquired, and it was like the history of Microsoft. It was brilliantly done, and I assume they're doing more, but it really is brilliantly done. Like it's literally the history from when it started. There's so much I didn't know about Microsoft. Like it's just, and I'm not pitching the stock. I'm just fascinated when I hear the history of some of these companies and how they started. She's like, that's so cool. Like, and some of it's a derivative of where they are now, but like some of the things they did to basically put them in such a monopoly position that they got away with because software didn't exist. like this wasn't a thing. Operating systems weren't a thing. Like they started it, and so they got away with so much because there was no marketplace. They created it. And by the time they became the monopoly, it was too late to really give them too much crap because there's really no competitors. So it was really interesting history. Anyway, I do want to dip into some other charts here. I saw this the other day, and I was really fascinated by it. So we have gold that's actually started to take off, especially since 2020. Like gold has started to do well again, and it's on a positive trend. I think in the in the last week or so it hasn't, but basically it's trending higher. And yet the shares outstanding in gold and IAU, some of the biggest ETFs that hold gold, have gone down since 2020, which means that there are fewer shares out there, meaning people were selling their gold. Who's selling? It's going up. Why would you be selling it if it's going up? To me, if you know anything about the gold bug mentality, right? And I'm sharing because some of you are gold bugs. I'm not a gold bug, but I'm a fan of gold. I just don't like labels. And but if you understand the mentality behind gold, people are fanatical about gold. I'm not saying they're wrong. I'm just saying there's like a mindset that goes with it. That's the same mindset that goes with things like, buying cryptocurrencies or Nvidia or whatever. Like people have this mindset, like this is the best thing since sliced bread and I need to own it. So whoever's selling, I have no idea. Why would you be selling that? It's going higher. It's trending higher. Even silver's going up, which has been lackluster for a long time. So to me, this is interesting. Like, who are these rubes selling the thing that's actually doing well? And they didn't sell before. They actually bought up until they bought and started to sell when it started to go up. Like, to me, I can't make heads or tails of it. Now, I will say this because I've been watching the gold market for a long time. Nothing makes sense in the gold market. If you look at the data, if you look at the COT data, if you look at basically the futures market, if you look at the gold, if you look at the gold market in general, none of it ever makes any sense. You can't look at it and say, oh well, the institutions are buying, so I'm going to be none. It doesn't make sense. It has never made sense. People always point to data. It doesn't correlate strongly outside of one small window. We talk about chart crimes here. That's a chart crime in of itself. Like you can't you can't correlate stuff in gold. Long term, you can, because inflation, it does do well with inflation, but short term, it'll drive you crazy if you try. Believe me, I've tried and I'm on the edge of crazy anyway. So, um, anyway, I thought I would share that because I thought it was just interesting to see how many people are selling gold when it's actually started to tick higher. I'm also going to share this. I haven't showed this to Phil yet, but I'm going to share it. This was an article, March 22 of 2000. So you were talking earlier about, Phil. I don't know if you want to talk about this. This is the first time you're seeing it, but these are the market caps and the PEs of some of the biggest companies. PEs over 100. You want to talk about this a little bit?
Sure. Because so back at this point in time, I was writing for the Motley Fool. And this was when they used to have their online portfolios, and I helped manage one of them. And I remember this era so well because I wrote an article, and all I had to do was put in the title, a couple companies there, JDS Uniphase, Cisco Systems, Nortel Networks. You put those in there, and that article that I wrote got more clicks than any article that anybody else wrote for the Fool, because everybody wanted to know about these stocks. Everybody wanted to know what was going on. And you look at those companies, Cisco, it still exists, but it's not worth now, I don't believe, what it was worth then, right? AOL Time Warner, well, AOL was like another one of those stocks that rocketed, and then it got purchased by Time Warner, and Time Warner suffered because of that acquisition. Oracle's still around. Nortel's gone. Sun Microsystems, I don't remember who bought them, but they're not an independent company anymore. EMC is part of somebody else today. JDS Uniphase is gone. Qualcomm, they're still there. They still have a viable business. Yahoo, I mean, it's still there, but like that stock was, remember Melissa Meyer when she was there at Yahoo, and
Yep.
she made that acquisition. I forget what the acquisition was, but it just kind of killed the stock, and that stock never became the same. So it gets back to the point that stocks can hit levels. Everybody wants to buy them. And then things change. We get too excited. It's like Cisco. I remember one of the things that they did, like to boost their sales, they sold to customers and they lent them the money to make the purchase. And then the customers couldn't do what they wanted to do. And then Cisco didn't get paid.
Isn't
I
that
remember
what NVIDIA's doing?
it could be, I don't know,
I've heard
but
stories that they're doing similar financing.
it was crazy. And I remember when I wrote it. So I used to cover Cisco when I was with the Fool, and I wrote a detailed research report. I got really good access to management. I talked to them, and then I wrote about these sales to their customers. I was now blacklisted. They wouldn't talk to me anymore because I told what was really going on. But you got to be really careful about this stuff, because there's so many stocks. As I said up front, we were talking about NVIDIA, they hit levels that they never get back to. Or some of these companies just go away. We get so excited. I mean, there was the Nifty 50 stocks. Like a lot of those stocks are gone too. It's not as simple as we like it to be. And you said about gold. Why are people selling it now? I'll tell you one reason. There's a psychological reason. It's easier to sell something at a gain than it is to take a loss. We'd rather buy that stock and it loses money, and we don't want to sell it because we don't recognize that loss, because our behavior gets in the way, right? That means we have to admit that we made a mistake. It's easier sometimes to just sell a stock and take a gain than it is, because now we say, hey, I sold it at a gain. I was right. I made a good call. But if we sell a stock at a loss, we have to admit we're wrong, and we hate to do that. So that could be part of the reason that that's happening with gold right now. I don't know, because I'm not a gold bug either, but I know that those kind of things happen.
Yeah, being a gold fan, I can tell you that gold bugs never sell; they just buy. So I don't think it's the gold bugs that are selling. I agree with your sentiment. The emotion part we talk about in the show a lot, and is very true. We don't like being wrong. Our ego won't allow it, and this actually applies to everything. It's not just investing. That's just how our brains work. But I did want to point out, I pulled up Cisco's chart, and the high was right around 82. Right now it's trading at 46, 25 years later.
And it didn't split that I recall.
Yeah, I don't think it needed to. Yeah, I mean, I think afterwards, 2002 went to a low of 8 from 82, and then it's slowly crept up. But look, I mean, this I like this clip, because if you look at the PEs of 99, 148, 217, 152, 105, 119, 115, 668, 166, 623. And at that time, the S&P was around 28.6
Yeah.
PE.
And look at those growth rate, those estimated growth rates. I
Mm-hmm.
remember reading a paper talking about the number of companies that can sustain 10 to 15% growth rates. It's a really small number. And we put these big, huge growth rates on these companies, and then we assume that they're going to stay there. But there's also the law of large numbers, right?
Mm-hmm.
Like you've got, what's that, 55% growth for Yahoo, you've got 44% growth for JDSU. And if you think about it, like law of large numbers, you can't keep growing. To go from 100 at a 20% growth rate takes you to 120. But now, if you want to grow to another 20%, now you got to get to 144, and it just keeps going up and up. And it gets really hard to sustain those growth rates. But sometimes we see it, we get so excited, and we just take those growth rates and we extrapolate them years out into the future. And that's just a really dangerous thing to do when you're investing.
Yeah, I couldn't agree more. I mean, the estimated growth rates, the S&P back then was 12 and a half. That's certainly a lot higher than it's probably what's normal. But anyway, getting back to reality. So I think the takeaway here that we could go down this road and really beat this horse to death with tech, but I think the real the takeaway here is understanding perspective. What is the perspective that you have compared to history? Because if you just started investing today, you're going to struggle because you're like, oh, it's always like this, because that's all you've ever seen. That's your only perspective. But if you look back, and certainly there's recordings and other times in history where you can listen to people, we just showed a clip of a newsletter. Like, you can go back and find these things, read newspapers back from 99 and 2000, see what people were saying, then go read 2002 and see what they're saying then. Like, go back and understand like the sentiment that's going on at the time, because you'll better understand what you're dealing with. What we're seeing now is kind of a bubble, but kind of not. Like, people aren't generally afraid of the financial system, but in some ways they are, right? Like, the banks themselves aren't unstable, but you also have access to a lot of cheap credit from the Fed. Then you have private credit, which is a big asset class now. We just interviewed somebody about that, but tons of money are chasing private credit now. So you have these bubbles that are forming because of cheap interest rates, which are now higher. But you have these bubbles forming, and at some point, things are going to go wrong. Now, are they going to wrong when it's I don't know what the PE is now of some of these tech stocks, but if they're 100, yeah, at some point something's going to go wrong. I mean, the best thing that could happen is the stock goes nowhere, and then the growth catches up to the price. But either way, you're taking a big chance by investing in a stock that has a high PE with a growth rate that's not equivalent. And Nvidia still has to fulfill their sales. They might have a big demand, but they still have to fulfill it. And from what I understand recently, their fulfillment gap between what's in the back order and what's actually been filled has shrunk to like only a few months. Now, I don't know if that's because their growth is slowing or because their capacity is ramping up. I don't know. I'm just saying that's what happens at some point. Either capacity ramps up to meet it, and then now you don't have back orders, but now you've got this extra capacity that has to constantly be filled, or at some point people just stop ordering it for one reason or another, which probably won't happen with AI because there's a lot of demand out there now. But point is this stuff doesn't go on forever. There is a terminal point where things go back to normal, and I don't know what that is or what's going to cause it, but you should be aware that that is what happens. So anyway,
I'd like to add something too. You talked about environment. So my favorite book on investing, if you're looking for a good book on personal finance, it's written in a really easily digestible format, easy to understand, a lot of good common sense applied, is Morgan Housel's The Psychology of Money. And I recently saw him speak at a financial planning association event, and I blogged about this. And one of the things he talked about is when we think about investing, when we got introduced to it has a big impact on how we think about it. In the 1950s, and he gave this example, and you look at the growth in the stock market was great. So people that started investing in the 50s, they have a very different perception of investing than somebody that started in the 70s when the stock market was relatively flat. The same thing happens with inflation. If you grew up in the 70s and saw high inflation, you have a very different perception of inflation than if you grew up in the 2000s when it was really low, in the last decade, right? So it depends on, there's a lot of things that are context. It's the environment that you grow up in. It shapes a lot of how we think about and feel about things.
Yeah, yeah, perspective is really important, and I think we all have to be mindful of what our perspective is. It's not like a good or bad thing, it's just more of a mindfulness thing, right?
Yep.
Because we don't know the truth, we don't know what the future is. So we just have to be mindful of how we're thinking about it. If you're emotionally engaged in a stock, it's probably a bad thing. If you're like, "Oh, I can't wait to go home and buy some more Nvidia or buy some crypto," you're getting you're emotionally involved, and that's going to cause you to not make intelligent decisions. So if I invest in a crypto and it goes up 100%, most people are like, yeah, I can't wait to go buy more. I'm saying I want to sell half of my position so I have no risk. Then if it goes to the moon, I'm going to make tons of money. If it goes to zero, I won't lose anything because I've already taken my initial investment out. That's a logical thing to do. People don't do it because they're like, yeah, but I'm taking money off that could grow, and then that's money I won't make. I'm like, yeah, if you make it. But how many people sell at the top? Almost nobody. So you're kidding yourself if you think that you're going to be smart enough to pick the top, because people can't. You can't pick the top. It's easier to pick the bottom. The top, it could go up infinitely. The bottom, zero is the bottom. So there's a certain sense of like, all right, the stock market's already gone down 60, 70%. It's not going down 100%, the whole market as a whole. So if it's down 60, 70, I think I'll hold my nose and go buy some today, right? You could be close and be like, hey, I picked the bottom, but really it's just the math, right? But could the stock market go up another 100% from here? Absolutely. It sure could. I don't know if it's going to, but you don't know where the top is. And so if people think they do, they're really fooling themselves. And if you think you're going to get out near the top, like these crypto people, oh, yeah, I sold the top, but I'm going to buy at the bottom. No, you're not. You're not. Sorry. You're absolutely not. you know, I watch this stuff all the time. I'm generally pretty good at it in timing the crypto movements. Even I can't pick the top. I sold out way too early in 2017. I like missed out on like 700% returns. But I also didn't lose out on when it dropped either. But the point being is you just don't know. Like if you make money, you get out. Be happy you made money and move on, right? And don't try to squeeze every little nickel out of the trade because you can't. Some of the best traders in the world don't, and so don't even try. I'm going to share this because I thought somebody sent this to me and I thought it was really interesting. This is global money flows. So this is the global M2 money supply, and I show this because this is the total stock market global money supply. So if you look here, 2020, we had massive amounts of money flown into the system and it's kind of gone sideways. But here around October, we saw a big spike of money coming in the system. This is global, not just the US. Interesting. And that's when the market took off. And then, of course, right around here, it's kind of gone sideways. The market's, kind of gone sideways. Global money flows is what drives markets. You need to pay attention to what's happening globally. And if there's money flowing in the system, it's going to bump up equity markets. If it's coming out of the system like it did here, 2022, when the markets were down, you do their own research yourself, but this is a good marker. It's not a good day-to-day marker, and you'll notice there's some things that don't line up. Like in 2021, the markets went up a lot, but this went up a little. The market still kind of went up here, even though it's sideways. So it's not always 100% accurate, but directionally it will be instructive. So if there's money going into the system, like if you wanted to know if we were going to zero after COVID, look at all the money that went in the system. Well, obviously we're not going to zero. You might as well just put all your money on red and take a bet because the global economy was shut down, yet they were printing money, and of course the markets went up. So I'm just saying, if you look at the best and brightest investors that are alive today, a lot of them look at this. Stan Druckenmiller is famous for being a really, really good investor and being good at the macro part of investing. He watches this stuff. This is very high on his radar, is looking at global money flows. He talks about it occasionally. So it's another marker to look at when you're thinking about markets. Should I or should I not invest in the trend? Well, this could drive future directions of markets. Now, if they start withdrawing liquidity like they did, well, then maybe you should sit in the sidelines for a while, right? I don't know, but it's just another indicator to look at. Enough is driven by global money flows nowadays, where it's. I don't know if anyone's noticed, we don't talk about fundamentals on this show a lot because that's not what's driving stock prices. I think this episode alone will tell you that that's not what's driving stock prices. So anyway, final thoughts, Phil, and let's wrap it up here.
I guess final thought is irrational exuberance is a phrase that we've heard in the past. It's one that we're going to hear again in the future. Emotions have a big impact on us when we think about investing. We want to try to avoid buying high. We want to try to avoid selling low. Just have a process, have a system that you use, whatever that is that you can stick to. Understand why you're making your decisions and try to, it's hard because we all want to, fear and greed, right? They drive the market. So those all have a big impact, but try to have something that helps guide your decisions so that you're not as susceptible to emotions when it comes to investing. Because as we talked about today, I know there's a lot of fundamentals, but it's not usually the fundamentals that drive what's going on. As for me, I know that experiencing big life transitions can be stressful, and my job is to help empower women facing new beginnings with the financial knowledge and tools they need to make self-assured decisions. My firm, Surprise Wealth Management. We'd love to get to know you. If you'd like to learn more about us, you can download our free ebook, How to Flourish Through Life's Big Changes, at apprisewealth.com/ebook. And you can also sign up for our blog. Thanks for having me on today, Kirk. Enjoyed the conversation.
Thanks, Phil. And before we wrap it up, I had to. I saw this tweet and it made my day. I'm going to read it to you because I couldn't do it better. America is a country whose children score low in math and science, but off the charts in self-esteem. A study of 8 developed countries found that the U.S. students were dead last in math skills, but number 1 in confidence in math skills, even though they suck at it. Yes, we're number 1 in thinking we're number 1. USA. Anyway, I had to leave it off on that. That made my week. Hopefully it made yours. That's the show for this week. Thanks again for joining us in Money Tree Investing Podcast. My name is Kirk Chisholm, Wealth Manager of Innovative Advisory Group. We don't just manage your wealth, we make your life better. You can find more about me at innovativewealth.com. And of course, you can find me every week here on the show. Please remember to subscribe to the podcast in the podcast app of your choosing. You can also check out the show at moneytreepodcast.com. On the website, you'll have access to the show notes, resources, and the archive shows. Also, we're now on YouTube. Please check out our YouTube channel. When you're there, please subscribe and leave a comment. Lastly, please leave a show rating and comment on the podcast app of your choice. Oh, and don't forget, do your own research. This show is for information use only. We're not telling you what to think, merely how to think about investing. We're also not selling any products or services, so do not consider this advice. If you have any problems with the show, I blame Putin. Please send me an email and express your feelings. If you're seeking financial advice, talk to an oracle or a fortune teller or maybe just a licensed financial advisor. I'm one, but as I said earlier, I'm not selling anything. But I'm easy to find. Have a great week ahead, and remember, no one will care about your money like you do. So invest in your life.